Going back to your point, David, on principal, when principal primary investors start selling down portions of their portfolio investments, are we actually seeing that happening? Sort of secondary market, is that being formulated?
No, what I'd say, where a loan's being sold, it might be broken down between two purchasers in a JV, so that one purchaser would acquire the performing component in terms of the criteria they agree between themselves, and another purchaser may acquire the non-performing or impaired portfolio. So vis-a-vis the vendor, it's a single trade.
But have you not started seeing sort of the early trades where they started selling the long picks instead of holding on to the long picks?
We've seen that. We've seen that, and we've seen more of borrowers partnering with new capital to buy their loan at a discount, but that discount being greater, hopefully, than the discount at which this loan was bought from the prime purchasers. That's your question. We've seen that, and we've worked on a few. And actually, these are often quick and sensible conversations to be had, because quite of the emotion and the provision levels is gone compared to an incumbent lender. You know, you arrive to buyers of portfolio A's has bought that loan at, I don't know, 60 pence in the pound. You turn up within 6 months at 65, the IRR may just make sense. And there's not a huge amount of emotion. Does it make sense? Does it not? How quickly can you transact? Do you have the money? With banks, as we all know, it's never as straightforward as that.
No, we've seen a lot of that where someone's acquired the loan because of the complications of enforcement, the quickest exit is a consensual one. So as much as they've got they don't have the historic baggage, they have a lower acquisition cost. So it's a win-win situation. If a borrower owes 100 and someone's bought the loan at 60, it might work for both parties to buy back the loan at 80. Both parties win subject to the pricing of the asset. So I think that's what the guys who buy the portfolios try to do, first of all, to establish a sort of track record of deals which helps on the further equity raising, etc.